Well, one of the big questions we keep returning to this year, why is the U.S. consumer so resilient? The truth of the matter is we keep spending. Well, fears of a recession, spend. Mortgage rates rising, keep spending. And Fed still sounding hawkish, we'll spend some more. Of course, there are nuances here on what and where Americans are spending their hard-earned dollars.
Indeed. One thing is clear, though, spending on having fun isn't going out of style. Our chart of the day tells the story. Spending in select categories from recreation to food service and accommodation is still going strong on an annual basis. The big question, can it continue in the face of higher for longer rates, diminishing savings rates and student payments resuming? I mean, you figure if the fear of resuming student payments and higher for longer wasn't already starting to bite into, the consumer mentality, perhaps nothing will. I know this is something that has really confounded the Fed here, but it's important to also note that we're coming off of the heels of a pandemic. So this is something of uncharted territory from what we've traditionally seen when there's a downturn in the economy. So I think that's why perhaps it's a bit hard to navigate. It could be, spending to make yourself feel better, some revenge spending, but you have to wonder at what point that's going to kick in. Maybe after all the holiday shopping and the credit card bills come due again, but it doesn't look like it's making a dent at the moment.
Yeah, I mean, this points to this constant divide we continue to see, which is how consumers say they feel, the sentiment versus the consumer spending, where they're actually taking their action and spending their money. But Rochelle, you asked the question about, whether in fact or when in fact this is all going to start to hit the consumer. You could argue we've already started to see some signs of it. If you hear from bank CEOs, they've talked about more and more consumers taking on more credit card debt. You also have this bank rate survey that came out more than 60%. So they have fallen behind on emergency funding or emergency money they've set aside. So yes, in 2020, we were talking about the COVID money coming in, savings because people were going out. I mean, it's been more than 3 years since then. So you could certainly argue that it's starting to feel the pinch for consumers, at least in this data we got from the Commerce Department, not pointing to. But recreation, to me, was a little surprising because that you've got to be really comfortable, right, to spend money there.
It's true. I mean, we certainly saw it when people were spending on, Taylor and Beyonce tickets, but still willing to travel as well, although some of that starting to pare back. But yeah, people really still holding on to that spending there. But because at first when I was looking at some of the spending patterns, I was like, is it just paying more because, for your essentials? But when you factor in recreation, it just doesn't add up. It doesn't make sense.
Yeah, maybe it's just still that demand, that the pent up demand that's still there, that's continuing. And of course, we talked all summer, as you point out, about people going out and spending on concerts and events and experiences. We'll see if that continues.